All right. Well, cool. Thanks for being here.
Yeah, thanks for having me. First
All
ever
right.
podcast.
First ever?
I think so, yeah.
And
Definitely.
you've been with CryptoQuant how long?
So I've been CryptoQuant. It was like 3 years in September actually, and
Okay.
then prior to that at another crypto company.
hmm
So yeah, I guess you could say like 4 or 5 years in crypto.
Doing this kind of data analysis work?
Yeah, the last 3 years at CryptoQuant was kind of strictly data analytics, like more investment, like process.
hmm
Then my prior job was on a data team at a company called Celsius, which was a crypto lending firm that went bankrupt.
Yeah, I
So like a
remember.
unique experience in general, but less in like on the investment side,
hmm
more on like product. But yeah, the last 3 years has been basically 100% investing and tracking like large scale events too. So like over the past 3 years, I've worked through and tracked the data for some of the biggest events like the collapse of FTX, like stablecoin depeggings, any kind of exchange news, like the Trump election, his launch of his coin. So like yeah, we track pretty much any crypto news that happens can be tracked at some level on chain on all the activity. So yeah, it's honestly been the best place to learn about crypto.
Other than it being interesting, like, oh, wow, Trump's election had a huge effect on the market. I mean, I can see that just by looking at the price.
Mhm.
What does your data reveal?
Well, I think kind of like event-driven news is interesting. Like this year, I guess there was anticipation that his administration would be more friendly to crypto,
hmm
and maybe there's some like by the rumor there. And I think for the most part, it's been true. Like he's obviously launched his own crypto company, like the World Financial, that's connected with the different other tokens and stuff. So I think the sentiment in that is good. But also, I feel like it's a bit of narrative that follows anyways, because I mean, crypto has done well through every administration, right? So it's kind of like the feeling that an administration gives you might have some help. But crypto pumped under Biden, crypto pumped under Trump last time. So the cycles kind of remain despite the presidency, but I think the sentiment is different. And he's definitely delved deeper into the degen with the launch of his own Trump
Sure.
coin and Melania coin. So, but no, it's cool. I think the feeling too is a little bit more safe as opposed to like doing business outside of the US.
Right.
Kind of Trump launching his own coin, maybe without like explicitly stating, like it gives some more like freedom, I guess, to people mentally to launch
Yeah.
here instead of being worried about administration.
Right, right. But what would someone pay your company for? Like what you just described is something a lot of people can just feel.
Yeah, so kind of there's two like I guess data types in crypto that most people kind of intuitively know exist, but maybe not categorize themselves.
hmm
The first is just off-chain data, which pretty much everyone uses. So that's pricing data. So like, what is the price of Bitcoin on all these different exchanges? And that's like probably the most popular topic in media. What's the price of Bitcoin when it hits 100K, blah, blah, blah. And then volume data from exchanges. And then off-chain data would also include kind of sentiment data. So what's the feeling in news? Like, is Twitter positive? So like, what are the views on YouTube for crypto influencers? So those are data feeds that are like off-chain.
And
then
you guys analyze that?
we analyze a little bit of that, but that's not mainly our focus. It's kind of just supplemental, I'd say, to our offering. The core really is on-chain. So people buy us because one, we aggregate data from a bunch of different chains. For Bitcoin, for example, it's like to pull all the Bitcoin data historically, run your own analysis and do it correctly. It's quite a lot of work, and people trade a ton of different assets. So they don't have time to spin up their own node, index the data, clean the data, and create their own metrics. So at some level, people pay us for like simplifying and streamlining the process for like digital asset data. And then on a second level, we have, I guess, like proprietary data sets that we create ourselves that adds another layer of like information from like just straight up blockchain data.
hmm
So an example of this would be like if I send you one Bitcoin's at 100K. So that's like interesting data, right? Like how many people are transferring Bitcoin at what price?
hmm
And like what is the network sentiment around this price right now? So that's one data. But then if you find out the wallet addresses for where we're sending them, that's even more interesting, right? So CryptoQuant, what we do is we label exchanges and other entities. So instead of me sending you a Bitcoin, what if someone that holds 1,000 Bitcoin sends all their Bitcoin to Coinbase? So that's very different than peer-to-peer like data, like me sending you a Bitcoin. So yeah, one of our most popular data sets is actually what we call exchange flows.
Yeah.
So our assets flowing from like big whales to exchanges because that gives a lot more like information than just one transaction count, right? So that's also what people pay for, is kind of a layered data approach, kind of finding out, investigating wallets, and then the process of doing that. So yeah, it's really interesting, kind of where things have developed.
How much of that data is noise? Because you're telling me these different metrics or these different types of data that you're following, but what good is it to know them?
Yeah, so I guess kind of just on the general like level, like there's like a set of, I'd say, general valuation metrics that are the most useful, that have historically shown when Bitcoin is overvalued or undervalued. And I guess probably the most fundamental concept is like called realized price. So basically, like from the time that coins are moving, like what is the price of Bitcoin like on exchanges at that point? So if the market on average sends and transacts all their Bitcoin when Bitcoin's 100K, like you could say maybe the realized price of Bitcoin is 100K. So then that's like the cost basis of the network. Essentially, it's a way to see like what is the value at when Bitcoin was sent the most. And so yeah, if like the cost basis of Bitcoin is at 100K, and then the actual like trading volume of Bitcoin brings the Bitcoin price to 200K, that deviation is interesting because you know how far above the average price of Bitcoin, the cost basis, the estimated cost basis, is the current price. So then from there you get like a lot of interesting metrics. Like in the past, Bitcoin has kind of spiked when the market price in Bitcoin on like Coinbase, for example, is 4 times higher than the average price of Bitcoin estimated on chain. So then you get to the point where you can start to make kind of educated guesses on if Bitcoin is overvalued or undervalued based off of the average like cost basis of the network.
Wow. So that's what you use to determine the true value, as opposed to, say, a company where you can say, oh, wow, they're overvalued because they have this much revenue, this much debt, whatever, this many assets, yet their stock is trading at this price.
Yeah.
And historically that has been under or over,
Yeah.
based on those previous factors. But Bitcoin doesn't have, it's not a company with assets, with revenue. So those kinds of on-chain activity will help determine whether it's over or undervalued?
I think so. I think there's also maybe 2 caveats to that. Like a Bitcoin max, you might say Bitcoin's always undervalued because Bitcoin's going to replace gold. It's going to replace a portion of the money supply.
Mm-hmm.
So like on an asset level, it's still undervalued in terms of like global assets.
Yeah.
Like, cause I think Bitcoin's maybe like 2 trillion right now in the market cap. But then you get to like relative value based off of the past. So like even at Bitcoin, you think Bitcoin's undervalued as an asset. When if Bitcoin hits 200K, it's going to be relatively overvalued compared to the past as far as in like market cap terms and like growth. So there's ways to like look at it in the sense of, is Bitcoin a good value to buy right now to accumulate more Bitcoin or to sell more Bitcoin? Like when is a riskier or a more opportune time to buy and sell Bitcoin? That's more about kind of what that is. And then like kind of what you're speaking of with fundamentals, like you would a company. So like Tesla, for example, like what's their production? Like what's their revenue? Like some people even try to estimate like different cash flow models like you would in equity. But I'd say those are more applicable to other chains with apps. So Bitcoin's really peer-to-peer, right? Like generally there's really not much to do other than send and hold, and that's an important use case. There's like ordinals now, I think, but whereas like look at Solana, for example, you have DEXs, you have peer-to-peer with stable coins, you have all these other applications that create revenue. And then you can kind of start to look at it like what is like the actual revenue of the chain?
Right.
What fees are people willing to pay to use this chain? So that data is more of like, I'd say, like stock picking analogy for crypto. Like on-chain shows you like which protocols are more popular, the most users, most transactions. And then you kind of get into more of like a fundamental analysis of like where is the best investment. Where Bitcoin is more, I guess, also a philosophy.
You had to come up with your own price model and to determine the real valuation of Bitcoin. The real valuation of Bitcoin. Historically, when there is this kind of activity, the price is about here. And now we're seeing this activity, yet the price is not just here, it's here. So it's overvalued.
Exactly. Yeah. So like,
Okay.
for example, right now, like eventually, or like in the past, like Bitcoin at 70K, like last cycle, if you think in cycles, I think 2020, 2021.
One.
I guess like there was 2021 was interesting because there was the peak in November
Yeah.
was actually not the on-chain peak that we saw of the past.
Mm-hmm.
So I think, yeah, like whatever, I think it was like maybe 4 months prior, like the actual on-chain peak was, where like most of the metrics, like the realized price I show you or I told you about, like flashed maybe like an overvalued signal.
Yeah.
So yeah, it's interesting because on-chain shows you relative to the past of when it was, but there's no rule set that shows you it has to hit this level. Like if the market cap hits 4 times the realized price of Bitcoin, the average price of Bitcoin on chain, there's no like rule that says it has to hit that for there to be a top. Like there's new like market, I guess, paradigms you could say. Like I think, for example, like this market cycle specifically, we're in the season right now of peaking. Think about the last markets.
Mm-hmm.
We peaked in Q4 of like the post-halving year.
Mm-hmm.
And I think October and November and December. So now, like seasonality, we're basically in peak zone. It would be telling you to kind of be weary, be like kind of cautious. But now, the on-chain peaks haven't actually like shown at all. Like none of the previous metrics have really shown a peak like they have in the past. So you have to decide as an investor: do you think, are you going to bank on that the metrics show exactly what showed in the past? Or are you going to have like some other data, like supplemental data, to reduce your risk as well in case the on-chain is wrong? So it's not an exact science on-chain, but there's ways to kind of like use the data to get some underlying like sentiment for when it might make sense to buy or sell.
This is for traders.
For traders, yeah. I guess even investors, because even if you're the biggest Bitcoin maximalist that never wants to sell, there's still better and worse times to buy Bitcoin. Like you could have thought Bitcoin was going to 100K last cycle, and you spent all of your Bitcoin at 70K, and then wrote it down to 15K, and you lost whatever 85% of the value of your US dollar, right? So even if like, regardless of your kind of perspective on buying and selling of any asset, it's still useful to know when to throw in your money.
I see.
You just get more value in general. Yeah.
I'm still not clear on the actual price versus realized price, or are those the same thing?
No, so like the realized price is an estimation for the cost basis of the whole network. The average price.
So that's
at which,
based on what the miners spend?
No, that's based off
create?
of the assumption is that when you move a Bitcoin, it's basically marked as like a sell, or it's used as an assumption that that's the cost basis of the network. So like, for example, in equity, like let's say you knew the exact price that everyone bought Tesla, and the average price of Tesla across the network was like $100. I think Tesla's maybe what, 200 or something. And then Tesla shot to 600. That's a big difference between the average price that the network acquired Tesla, or the market acquired Tesla, versus the current price that Tesla's trading at.
And what does that tell you?
Then you get into the point where you say, okay, Tesla or Bitcoin, whatever, is 4 times the price at which people bought it at. So even think about it mentally.
So you're predicting that a lot of people are going to want to sell to take profits.
Yeah. Once the market becomes full of like unrealized profit, then you can kind of get into a zone where you say maybe it's more likely they'll sell. Think about it like mentally right now. Let's say you buy a random crypto today at $1, and then it goes up 50% today. Maybe you're like, oh, it feels good, but I'm not ready to sell yet. But now let's say that crypto goes 10x, 100x. The activity, the investments of when people will take their money out changes, right?
Have your predictions worked? Because, and I want to poke at this, the validity of this a little bit, because this industry is so unpredictable, and because there isn't a lot of hard data, or maybe there's more than I know, to base evaluation on, people sell a lot of losses. So like when we're in the bear market and it's going down, a lot of people are in the red, but they're still selling because they don't want to be in the red more. Yeah,
I think like when we're looking at, especially in bear markets, like the type of holders are interesting because you can kind of group them into long-term holders, short-term holders, and then look at kind of the probability of when they will sell. So like that realized price I said, you can also group it in like people who've held Bitcoin for 3 months.
Okay.
So you don't have to look at it even as a network as a whole. You can say, what are the short-term holders doing? What are the long-term holders doing? And then kind of go from there. But I also think it's important to say like people don't always sell because they want to sell. Some people are forced sellers or liquidated. So a good example of this is last bull run when all of the leverage companies had some carry trade for, if you remember Grayscale, they had their like Bitcoin trust. So a lot of companies like bought Bitcoin or bought the trust and had, or bought Bitcoin, sent it to the trust to get shares, and then tried to arbitrage the value from the shares. But then what happened is they locked their Bitcoin. They were forced sellers, and they had to sell. So it's not always people sell at a loss because they want to or they're worried about the market. But some people are over leveraged.
Right.
Business practices were wrong. So like forced sellers happened. That also caused it.
There's a lot of black swans in this industry.
There is a lot about black swans. So like the risk is, there's like the known unknowns and then the unknown unknowns. Those are the.
Are you in sales with your company?
Yeah.
So what do you tell a potential lead? Like, our data will help you know with more certainty where the price is going.
Yeah, I'd say there's a couple of different use cases that we would sell to. So the first is, I'd say, retail investors. They look at charts on our website. They make quick analysis on Twitter. They might be little influencers, and they kind of do it that way, some valuation. And I'd say the bulk of our like actual data sales is for like hedge funds and traders that might even be like asset agnostic. They just view it as another asset to trade. So the really big, the selling is like, you have all this different data, you have all this activity on holders and activity of different participants, and then they get a quant to put in their models and see what's useful for their strategy. So I'd say most of the sales is from like alpha strategies, people buying our data to trade Bitcoin on.
Yeah.
And then the second half is like risk management. So after FTX, a lot of people use on-chain data for exchanges too. So we track the holdings of exchanges. And from there, you can kind of gauge the health of an exchange too. So let's say you're a market maker, you're trading on 5 different exchanges. You want to know how much like liquidity and stores of Bitcoin there are on those exchanges, because FTX had basically fake Bitcoin, essentially, kind of didn't have the reserves to back up what they were saying. So yeah, part of it is risk management. Like we do a process called dusting where you deposit a little bit of exchange or a little bit of Bitcoin or crypto into exchanges, and then you see the wallets of those exchanges. And then from there you can group the activity, like where called like hot wallets and cold wallets. So you can see like the activity of exchanges. It's actually an interesting graph of like the different pockets and clusters of where Bitcoin's held. So yeah, that's how we get the exchange wallets too. You deposit a little bit, dust it, we call it, and then gather it. And then from there, you can understand which exchanges hold the most Bitcoin, the flow of Bitcoin, and just generally it makes it all metrics a little bit more granular too.
A real popular one on X is, there's a bunch of inflow. Like Coinbase is getting a lot of Bitcoin.
Yeah.
And that freaks people out. Or at least that has people thinking the price is going to dip. Is that true? Is that a true predictor?
I think at some level it is. Like it would really take a full-on quant to tell you exactly like if it is a perfect predictor. But I think generally it is, especially for smaller coins, like altcoins. Bitcoin's unique in the sense that it really is a bearer asset. People want to hold it in their cold wallets in custody, and not hold it on an exchange. Whereas smaller market cap tokens, like let's say a small token comes in and they send 20% of their supply to Binance or Coinbase. That is much more of a red flag than, I'd say, billions flowing into an exchange for Bitcoin. So yeah, I'd say generally it is a predictor of price. Like sending Bitcoin to exchanges is probably negative for the price most of the time. But also I think Bitcoin has changed too. Like people have just naturally custodied their Bitcoin more. So exchange reserves have gone down since like FTX, just people being worried about their coins being gone, plus better custody solutions too, like Coinbase custody or any of these really Fireblocks. So yeah, like I think the metric understanding changes over the time, but still traders use it for sure.
Do you audit, maybe not audit, but do you track the tokens of DeFi platforms like Aave?
Yeah. So I think we have like 100 or so ERC20 tokens. And yeah, we track the flow of like Aave going into different exchanges, and then also fundamental data for all these tokens too. So like, what are the holders doing? What are the tokenomics of it? So how much Aave is being released to the market from foundation wallets? That's an important stat. And then just generally too, like the revenue of the platform. That's like a different subset of data. So like anyone listening looking to invest in like projects like Aave or a DEX. So that data is part of it's on chain, like the holders of the token, how many people are sending it. But also there's like smart contract data that holds even more information. So like, what are the size of the trades people are using? How much fees is Aave collecting?
Mm-hmm.
So that's almost like stock picking, right? Like there's a fundamental product people are paying to use.
Yeah.
And then you can decide, is Aave better than PancakeSwap or all these other swapping kind of sites?
As a token, the Aave token, or do you mean using Aave as a service?
Well, I guess because it's interesting in crypto, you don't have to buy the token necessarily to use the product. But yeah, like from an investment side, like which DEX am I going to use? How many users does that DEX have? What are the fees? What are the spreads? Then on-chain data, you can basically be like a stock picker, venture kind of fund, like seeing the fundamentals of a company, like translated to crypto is basically what on-chain data lets you do too.
But a token is different than equity, like a stock, right?
Yeah,
like Brave, right? The Brave browser and their token, BAT.
Yeah.
Right? Like a lot of people love Brave browser, but BAT has been quiet.
Exactly, yeah. So what's interesting about crypto is, because if it's not a network token, actually most of the time it doesn't need to be used. Like the founding team needs to make a use case for the token. So Bitcoin or Solana or Ethereum, like if you want to use any apps on that network, you have to use a little bit of Ethereum or Solana or Bitcoin to pay the miners or the nodes, right? The validators to make the network working, which creates demand for the token. But then at layers even lower than that, it's what is the supply of the token? So like a lot of like, maybe, I don't know the exact tokenomics of BAT, but when you launch a token, maybe the founding treasury, the DAO holds 50% of the supply, and they're just sending tokens and tokens and tokens to the market. So you're getting like all this basically inflationary pressure on a token without a use case. And I'd say even most projects that you don't really even need the token. That's kind of also, I guess, contentious in crypto. Like people launch a token for a project that doesn't even necessarily need it. So I think that happens too with apps sometimes. It's a useful tool to raise money and kind of create kind of buzz around a project when there's a token, because users feel like they're getting a part of it. But if the tokenomics, so like the supply of the token doesn't make sense, or if kind of the value structure, because like some tokens have burns, like if the app makes money, they'll burn some of the token.
Yeah.
So it's not as simple as this app is really cool, it has a lot of users. That doesn't necessarily translate to a token price. Like the fundamentals need to make sense and align too, which also it's so complicated to track and convoluted, but I think it's important to know, because it's not as simple as good company or good this. And then even think about equities. Like if Tesla was just to double their amount of shares over time and dilute their stock, what would happen to the price?
Right.
So the same in crypto, but we don't think about it like that often. But yeah, that's part of it as well.
Do companies like yours see themselves as head and shoulders above traditional technical analysis?
Actually, I'd say most of the time it's like in unison you would want to use it with. I think kind of my point is that you should use both. Like on-chain is in sense fundamental, and then technicals will like always be important, because it's just another way to gauge like market sentiment, right?
It's not, you wouldn't classify it as reading the tea leaves?
I don't know. I don't think technical analysis is reading the tea leaves really at all. Like I think with crypto, for example, it's such an exponential market. Like certain indicators have worked in the past, like simple moving averages. Yeah. It lets you catch the upside while limiting your downside. That's just like logic, right? If you totally throw away TA altogether, like any metric, like mean reversion. So like how overbought is Bitcoin? Even just the price. Forget about on chain. Like that's interesting. Like if Bitcoin 10x's in a day, that means something. Obviously 10xing today won't be possible, but so yeah, I don't think it's like astrology really at all.
Well, maybe I'm referring to TA when it comes to all right, when it does 3 of these, it's going to do one of these.
I think maybe there's some traders that are good with that and they know it.
The day trading, I mean.
Yeah.
They're looking at the actual graph and saying, all right, you always know it's hitting the ceiling here. So there's 3, it's tested that 3 times. So now you know on the 4th it's going to go above it.
Yeah. I think there's maybe something to it if you really know what you're doing. But I think everyone has to kind of choose their subset of analysis. And I think if you're good at that, you're good at that. And really what a chart shows you is just like investor sentiment and behavior. So it's really, you can see it when Bitcoin hits an all-time high. Like how many times has Bitcoin almost tapped 120K in the past 6 months? Is that astrology? Not really. Like it's happened.
No, there's clearly a ceiling there.
Exactly, right?
Yeah, there's clearly a ceiling. But the idea of knowing, okay, after 3 hits, it's going to go up.
Yeah.
That seems like nonsense to me because half the time it goes up, half the time it goes down.
Yeah.
And maybe it goes up after the 2nd tap, 3rd time's a charm, maybe 4th time's a charm.
Exactly,
You don't know.
You don't know exactly. But I think it gives some I wouldn't write it off entirely. At least I haven't. Because like levels mean something when people accumulate Bitcoin, the price levels at which it stalls. Like, yeah, I think it still has some meaning. And if traders focus on that and they're good with it, then yeah, I think it's possible. So I haven't written it off, but that's not, I guess, my full on kind of process.
Sure. Well, what else besides price does your data reveal?
Yeah, one of them I'd say I thought about it is like risk.
Okay.
So I guess it's definitely less of like a sexy topic than predicting price.
Everyone wants to know the price.
Yeah.
But I'm also interested in like the activity. Like, can you tell? Well, just talk about risk first.
Well, yeah, I want to touch on risk because I think it's important when it matters, and then when the markets are good, people don't care about it. So now, like when Bitcoin's at an all-time high in a season where all-time highs have happened, I think risk is like more interesting. So yeah, risk in a sense is one, we talked about exchanges already. Like, is there sketchy activity happening on exchanges? For FTX, for example, we called out that there was things happening on FTX that looked abnormal. And some people took their money off exchanges, off of FTX. So at one level, that's an application. But the second one is just generally like who's holding Bitcoin. Are long-term holders sending Bitcoin to exchanges? Like those are risk signals where you have a lot of information on through on-chain data that you wouldn't have in price. So if a ton of long-term holders that hold a ton of Bitcoin are sending it to exchanges, then that's interesting, right? And even ETF wallets, for example, tracking, seeing the accumulation of
I see a lot of that too, and I don't know how much that correlates with price, but Bitcoin inflows of ETFs or dollar inflows into Bitcoin ETFs was plus 3 billion in July, and people cheer that, give it a lot of thumbs up, but they never ever talk about when it outflows a bunch.
I know,
because everyone just wants to cheerlead the price going up. But I don't know, is that an indicator of price going up when people are buying the ETF? I suppose it would be.
I think the ETF's interesting because, I mean, some arguments are that, so like at this time in the market, we haven't seen like a parabolic rise. Like normally cycles end when things go parabolic. Interest in media, price, clearly parabolic. But here there's been kind of this slow crawl the past like 6 months, right? Which is not really representative of the tops we've seen in the past. So some argue that because there's like this, I guess, institutional bid through ETFs, that there's less, like there could be less like parabolic toppy looking charts. So I think maybe there is a more constant bid, but also like the inflow numbers. I mean, there's a lot of strategies maybe hedge funds are running as well, like buying Bitcoin on here or this pricing and selling it or shorting it somewhere else. So I don't think like just straight up numbers of inflows and outflows to an ETF necessarily tell you the full picture. But I think, volume and trading and then the kind of more access to Bitcoin like institutionally is going to be, I mean, it's definitely useful for the market, I think.
Say more about risk. And because you talked about, it's risky if, or that indicates a level of risk if if long-term holders are sending their tokens to exchanges. But that to me sounds like another price predictor.
Mm-hmm.
Like, oh, the price is going to dip.
I guess, yeah. There's, I guess, types of risk. Like there's market risk, like price risk. And then there's even like liquidation risk, like our futures markets liquidating. Like actually, I think last week or 2 weeks ago was the biggest liquidation event in crypto.
Right.
So tracking the flow of exchanges into that. There's like systematic risk for like companies, right? That on-chain can help. But then there's price risk and like holder analysis that also gives you more intel. I'd say, but I agree with you, like it's kind of hard to pick a metric as a retail investor and say, I'm going to sell my Bitcoin when this amount of holders pull in.
Right.
And I don't think the average person even needs to. But I think what like we're seeing institutionally is there are these data points that you can put into different models and it gives you some extra insights. So I think like that realized price we talked to earlier is like an aggregated version of that, a little bit more accessible for the average person. Then tracking or getting notifications on their phone when someone sends 10,000 Bitcoin to a wallet. Like that's almost like too much for a retail investor to be useful. So yeah, I think there's like a kind of a whole plethora of on-chain that are more simple for kind of investors, retail like us, and then more advanced ones that like institutions would use for their strategies.
You might be able to determine the risk of a new token for a institutional investor or a hedge fund about whether they should invest or in that token. You might tell them, this is a question, not a truth statement. I mean, I'm just asking like, so you might tell them, yeah, no, I don't think World Liberty token, did they have a token?
I think, yeah, they do.
You might be able to tell them, well, the risk is this for that particular project.
Yeah, I would say most of the time we actually don't give specific, I guess, recommendations or anything like that. Just because people are quite advanced, like they have their own quants and models that they use with our data. They just need access to data and, if possible, proprietary data that other traders don't have.
Well, what about if there is no data because the token's new? Can you refer them to past projects? Similar projects have done this.
I think, yeah, for sure. I think like when like World Liberty, for example, like even if it's new, you would know the tokenomics of it. You would have access to the supply data, the activity of it. Very quickly, you could discern the address wallets for like Binance or Coinbase when people are sending. And then what a hedge fund might do is they might read the white paper of it and say, what are the tokenomics? How much tokens might be released? Like what's the vesting schedule of the tokens? When will the insiders sell? So those might go more into like a hedge fund analysis of buying a token. And then I think World Liberty has more kind of stuff behind it with Trump.
Oh yeah, there's all these variables.
If you buy,
everything's so new.
If you buy the token, maybe you get access to the administration.
True.
So there's like I think a lot more to like tokens in general than maybe just the numbers. There's a lot of sentiment, and
I would think for a company like yours, it's as much about learning from, say, that recent liquidation than it is about maybe telling.
Yeah.
Like I would think for a company like yours, a recent event like that, unprecedented, would be a learning opportunity for your company to really like, oh, what does that tell us? What does that, more than you turning around and telling your clients, well, this is what this, it's like, no, we're learners here too.
Yeah.
Because it's also new.
It is new. And I think just having the data in general is like the first step. So are you already tracking the biggest exchanges?
Yeah.
Are you already doing this? Because before something happens, you would have no idea, right? It's like before FTX, before Celsius, before all these companies went bankrupt, you really didn't know, or no one cared in the same way before. Yeah, so like when it happens, if you're fortunate, you have the data for it already. And then you kind of get all the inquiries from maybe different clients that are asking about it. But yeah, in general, I think it's been super cool to cover it, and lucky we had data for a lot of it.
And then once an event like that happens, whether you read the data and come up with your own conclusions, you have the data. And so people might want to buy the data.
Exactly, yeah.
So that they can come up with their own conclusions.
Yeah.
You just provide the data.
Pretty much. We apply the data and kind of show ways to do it. So maybe like for when FTX, for example, happened, we had a lot of inquiries about the data. And then our research team released like what we call applied research. So how do you use our data in strategies? Not to necessarily give a perfect strategy for everyone to use it exactly, but an example of how to apply it and think differently with it. Yeah, so we've had like post FTX, for example, clients reach out and ask for that data.
Does the phone ring a little more when a big event happens?
Yeah, for sure. Definitely get more inbound requests. Yeah, it's interesting. Like some of our best times are actually like the worst crypto market times. Like when most media citations for on-chain data when something big happens. So when like World Liberty, we got a lot of citations, FTX, really any big event surrounding Binance, we have data for, which gets a ton of information. So yeah, like just having the data has been super useful.
Can you tell me what data on that CryptoQuant has aggregated can tell us about why Binance token has done so well?
Yeah, I think Binance token is, I guess, interesting in general because, I mean, for one, it's like the most popular crypto exchange in the world. So there's utility with, I guess, the token and the whole Binance ecosystem and like Binance Smart Chain. The kind of network effect of Binance users, I think, has been just useful for that token. And it's also been out for a while, so like tokenomics are solid. And also just generally like the Binance Mafia, quote unquote, but has been super like popular and people use it. And that, I guess, at some level, the on-chain shows like a ton of users. But I haven't done a super deep dive into BNB, but it has done well. And I think the markets of Binance are extensive too. So the access to BNB trading is also really developed too.
Back to Binance, because it is curious how you get these sudden lurches in price.
Yeah. I think there's some people online think there is more to it. Like Binance might be not manipulating the price, but somewhat impacting the price of different tokens. So Binance BNB token looks stronger. I don't really know. I haven't looked into it that much, so I wouldn't make like a full-on statement on it. But like, for example, Binance versus Solana. There's a point when Solana almost flips Binance in market cap, and then BNB pumps.
Oh, funny.
Some people think maybe it's Binance controlling it or using their market makers to manipulate the price of other tokens. I don't know about all that, but yeah, it's definitely like quite interesting to see the levels at which tokens flip each other or the pricing changes, because market caps in crypto change so much. Like 20% swing in price, like there's a new top 10 tokens in crypto. So
yeah, it's fun looking at the top 10 over the last 10 years.
Yeah, like XRP somehow stayed in there. Yeah,
you see ones like Litecoin, and then they just sort of drift slowly descend.
Yeah, I guess there's an argument that maybe we're shifting more towards quality and utility, and some of the older projects are starting to die. Maybe that didn't have utility. So like Litecoin, for example, is one that doesn't really have usage, or like Bitcoin Cash. All these alternatives are kind of now starting to dwindle off in usage and market cap. I also think it's funny how like maybe 3 of the top 10 cryptos are stable coins.
Oh, right.
in market cap.
Right.
Which is kind of a funny ending and use case of crypto.
Or we sure didn't see it. Yeah, there were no top 10 stable coins several years ago.
Yeah. So like the stablecoin market too is also a big thing we track too. So the flow of stablecoins, and because stablecoin gives you a picture of liquidity in the market. So there's some metrics you derive, like what is the, I guess, supply growth of stablecoins over the course of a couple months or a week. That gives you kind of insights into the market, because if people are minting stablecoins in Tether or USDC, the assumption is maybe there's more trading desire for the market, more activity. So yeah, tracking the minting of stablecoins is also, I think, important for the market too.
What about the behavior of the crypto holder? So, like for instance, with stablecoins, you see a whole bunch of stablecoins flowing from the U.S. to Argentina or something like that. Like that, then that indicates, they're using that for remittances.
Yeah.
Instead of Western Union, or instead of proper crypto, they're using a stable coin.
Yeah.
Things like that, right? Do you read some of that data so you can tell about what people are up to? Like, oh wow, the Doge community really bought into their, I don't know, this particular, like, are there NFTs on Doge?
On Doge? There might be. I
Or
haven't really done
are
that.
there any? I thought there was a Doge NFT. Well, let's use another example.
But I guess I think what you're getting at is like, can you
Human
look into
behavior.
stablecoin activity as like a use case of crypto, and
Yeah,
can you actually see how people are using a stablecoin?
in different parts of the world.
For sure, yeah. So we do a ton of like analysis on that as well. So I'd say like USDC, for example, is more of a institutional crypto
Okay.
focused, like in the US, definitely still payments, but less popular globally. Most of my coworkers are like Korean, Colombian, and in Asia, across Asia, we do business. So most of that is USDT, Tether. So like USDC, I'd say is like the prime premier, like regulated stablecoin, I guess in the US institutionally. But USDT by far is the most successful stablecoin in supply and usage across the world. So USDT, like just I guess anecdotally from my friends around the world that I worked with, is USDT is actually used. Like my coworkers in Mexico or Colombia will get paid in USDT.
Right.
And in Thailand, people will, onboard crypto through USDT, which they wouldn't do through USDC. So like the activity of different stablecoins is quite interesting as well.
Can you tell if people are using crypto to buy stuff?
I guess that would be more like payment terminal kind of data. You can kind of make assumptions through average transaction price, for example.
Okay.
And we've done that analysis. Like the average transaction I can't remember the exact numbers, but I think just broadly the average transaction size on USDC, like maybe the more US institutional coin, is a lot larger than USDT. And maybe USDT is used for actually more remittances and payments. So yeah, you can make assumptions through like usage and behavior. And then also like the exchange activity of those. So which exchanges hold the most of this stablecoin versus that stablecoin? Like what are the preferred kind of usages? And yeah, USDT is more broadly used across outside of the US, I'd say, and most popular on Tron network. So we analyze a lot. Most of it's on Tron, which is kind of an interesting
It is
thing as well.
interesting because in the U.S., I don't know a single person that uses Tron,
Yeah,
and yet it's huge.
yeah. I know. I think so. Part of our business model too is working with foundations. So I know people from Tron, Ripple, and we like kind of do analysis for them or research. And yeah, like we always ask like, why do you think it's so popular on Tron or this network? And I think part of it too is also just the network effect of like Tron's also quite old. It's been around for a while.
Yeah.
They adopted it. They were cheaper than Ethereum when they came out, so it just made sense. So I think there's like maybe logical reasons like cheaper and faster why people use it, and then also just first mover advantage. And I actually think that what's interesting about crypto now is like maybe the end user won't actually know what chain they're using. Like if I want to send you $1, maybe there's just an app that routes it through the most preferred network or to the cheapest network. And I think maybe throughout the next couple of years or next decade, like the average person, for them to choose the network they want to use for a crypto transaction, maybe is in the future. Like if our dads or grandparents ever use crypto, are they going to choose between Ethereum or Tron or Base or Solana? Probably not. They just want it like kind of abstracted away. And I think that stablecoins are a good use case of that. Like you have a stablecoin, you don't even know what network it's on, you just know you can send it.
Yeah.
And it's kind of simplified for the end user.
Yeah.
And I kind of hope it goes into that way. Because even for like crypto native people, it's still very convoluted to choose a network. Like let's say you want to send $1 on Polygon, then you have to swap your Matic for ETH Matic. And it's just like too convoluted, even for people that want to use crypto. So I think now we're seeing companies that are abstracting away a lot of the complicated parts of crypto. And I think that's kind of cool on the product side as well, even outside of investing.
Does the market cap of all the different L1s correlate with the activity on those L1s?
I would say maybe generally no. I think generally it's a good indicator, like users, fee revenue. It's also like, how do you define activity? Is it just transactions, or is it users, or is it fees collected? So there's a lot of factors that show like good activity, because you can spoof a lot of addresses or a lot of transactions on a network. But like a really robust network will have stable coins we'll have dexes, we'll have NFTs, we'll have like perpetual dexes, trading. So yeah, there's like all these different things to look into outside of like Bitcoin, where you're really focusing on the pricing of the network. What are the holder activities? But then for other networks, it's on-chain data shows you the fundamentals about the user base, the applications, the fees, the tokenomics. So it's more complicated, but it's also important because, I mean, what other data would you have to choose? There's millions. Right now, there probably is millions of crypto token contracts.
Yeah, I'm just wondering if like, Tron's popularity equates to its top 10 valuation, market cap, that kind of thing. Its tokens valuation, I mean.
I think at some point, like in Tron use case, for example, like you're using Tron to send USDC. So if you have this like or USDT rather, so you have this overwhelming use case that you're using the network token to spend, right? Which causes demand for the token. So if you find this use case, this like niche, it's not even really niche anymore. There's like billions of market cap of USDT. Then you have like all this activity funded from this use case. So for Tron, it's it's that stablecoin use case. For other projects like Hyperliquid, for example, it's like a perp dex that came out I think this year. That like all that use case flows in from the token need. So yeah, it's I think there's definitely correlation between use case and crypto price and market cap, but I wouldn't say it's like a guarantee.
No, because Binance's activity didn't double, yet their token doubled.
Yeah, I mean, that's the thing about too in crypto. Like some people argue maybe fundamentals don't matter all that much because when you find like a liquidity flow, the whole market raises, right? Bitcoin will raise, Dogecoin will raise,
yeah,
Tron will raise,
yeah,
all these other whatever crap coins will raise regardless. So some of it's like opportunistic trading in general, and then some of it's fundamental, like over time, which projects will last. So if you're really trying to be a holder that is trying to choose a project, I like to do it kind of in funnels. Like the first level is what fundamentally is the best project. So like, why should I invest in Solana or BNB over any other token? And I think buying Solana is and holding it, even if you never tried to sell, like then fundamentals matter, right?
Mm-hmm.
If you have no technicals at all,
right,
you say, I'm going to choose a project to buy and hold forever, which I think a lot of people in crypto do either on purpose or they end up just never selling, then fundamentals matter. But then if you look at small tokens, like you could maybe choose a random crap coin, then if you don't sell or have any process, you're talking about minus 99% of your investment gone.
Right.
Even Bitcoin, the most fundamental sound crypto, went down 85%.
Right.
Whatever, a couple of years ago.
Right.
So yeah, fundamentals matter in choosing like which investments might do the best. But I think in crypto, nothing is guaranteed in like an exponential new market. So I think that's important too.
Maybe it's like human behavior, right? Like if you look at the popularity of a person online, an influencer, there's often a meteoric rise. And then they maintain it if they continue to produce content or whatever.
Yeah.
But it's not like they gain 1,000 followers a week, consistently. It's like this. Whew. And so I noticed that in crypto where, the price will remain, again, I'll use Binance, BNB. It was like 600, 700, 1,100. Like what happened? I always find that to be so curious. Like, whoa, I was going to buy yesterday and now today it's, 60% more expensive. What the heck?
I know. Yeah, those ones are always, you can never really wrap your head around those big moves. In crypto, they happen. And those are more of like opportunistic trades. Like, is there a new whale buying a ton of BNB? But like most of the time, there's some gradual raise in metrics before huge accumulation happens. You can never catch every pump or like maybe advanced traders can. But I think now we're getting into the point, because like what you said was, or like what we were talking about is crypto like maybe it comes out, it's really popular, and then it dies off over time. So I think what we're finding is like between even now and maybe 2016 when like maybe Ethereum started becoming more popular, smart contracts, is we're finding, I think, two use cases in crypto. One is this like sound money, which is Bitcoin. That's kind of the use case I think most people think of Bitcoin in. It's just secure, sound money. It doesn't need to be fast. It just needs to be secure and go up in value. That's kind of the use case of Bitcoin. I think some maxis would disagree. That there's more to it, which I agree. But and now you're finding like all these new projects that came out first experimenting with new tech, but now you're getting faster and faster. So Ethereum, for example, it came out, it was new, it was fresh. It added smart contracts and apps to crypto and stable coins. And then it was like 15 transactions per second is where it tops out. And now you're getting to 2026, 2025. Solana comes out, you're running at whatever, over like 2,000 transactions per second sometimes. So you're not, like now we're not even seeing marginal increases in tech.
Yeah.
You're seeing like exponential differences between the abilities of networks. So I think that changing over time too, like if projects don't innovate, they're going to die. And I think probably be a winner takes most scenario for a lot of the cryptos. Like maybe some will be better at trading, some projects, some will be better at stable coins. Like Tron, for example, winner takes most is a perfect example where most of the USDT supply is on Tron. So I think it'll be kind of subset like that by use cases. And yeah, if you don't innovate, you die. And I don't think that's a new kind of thing either.
No.
Like in equities, think about it, Amazon, Google, like winner takes most in everything. I think crypto right now is in like the exploratory phase where
the chains will find their niche.
But I think Bitcoin's unique because you're not even really competing on a tech level. You're competing on like a philosophical level. Like what can really replace Bitcoin? Like a new project with new tokenomics doesn't, like making a new project with 10 million Bitcoin it's not innovation. But yeah, now I think there's like fundamental projects, and then now there's like really like new tech that's also coming out, which is I think also tracking that is important too.
Do you track IP addresses so you know what regions of the world are doing what?
No, we've had like requests for getting kind of data on that. The best proxy we have is, I guess, trading exchange like regions and time zone analysis. So like what times are people sending Bitcoin? Like is it during Asian hours, work hours, or US hours? That's probably the closest proxy. Yeah, like in like exchanges in South America, like if most people are sending USDT to those, that might give you some insight. But yeah, no, tracking IPs, no, we haven't done that. There's so many different data sets that it's quite a...
So you don't know which countries are most active. You don't know which countries' residents are most active. Like if a country has a banking crisis, you won't see a bunch of inflow into that country's residents' crypto accounts, but you might see a big inflow. Let's say Argentina has a banking crisis, you might see a big inflow into an Argentine or a South American exchange.
Yeah, potentially. I think it's hard to know exactly because the winners take most. Again, like Binance is such a strong exchange throughout the entire world. So like in Colombia, they can use Binance.
Yeah, right.
The US, I mean, you obviously can't use Binance right now, Binance US. So yeah, like if most of the trading volume is through Binance, it's kind of hard to tell. Now,
sure,
Binance internally, their data team, I'm sure has data on it, and that would probably be pretty interesting. But
so you can't really tell what's happening globally, like but regionally.
Yeah,
geographically.
I think it's tough.
Yeah.
For like Bitcoin mining, you can tell like where hash is coming from.
Okay.
I think at some level IP, that data is interesting. But as far as like trading and like usage and transactions, like just whatever the IP address of a miner,
okay.
Kind of gauging where hash rate's coming from.
Mm-hmm.
That's probably the best proxy for Bitcoin. But then trading, it'd be like trading zones or different companies, their activity as a proxy. But yeah, it's tough. We've had a lot of people want to know. But yeah, I think it's hard. I don't know if there's been a perfect solution to knowing exactly around the world.
Yeah, it's so, it seems to be pretty secondhand or indirect. Like you don't know this is an institution. This could be a whale.
Yeah.
Right?
Yeah.
That kind of thing?
Yeah, I guess you never really know. I think like what we do, there's some like automated ways to find wallet addresses. So maybe you can, like dusting what I talked about earlier, you deposit into exchange and then you gather based off of the activity of where they send those little bits of crypto, what other wallets are the exchange. But then you also have this whole subset of analysts that are like on-chain sleuths, basically. So they look at wallet activity and they try to find manually the patterns of different holders. So like, for example, MicroStrategy's wallets. You have people that are really good at tracking activity on chain to see, like based off of the time, the holdings, the amount,
Yeah.
they can kind of discern which wallets are MicroStrategy's, or Coinbase custody, which is also very hard to track. And so from there, you can kind of get a picture also of holdings of like private companies.
Yeah, they say, I just read that Tesla's, or I think it's Tesla,
Yeah.
Bitcoin was moved recently.
Yeah. So that's popular in the media as well. Or exchanges might even just reshuffle their wallet management. So they might move 10,000 Bitcoin, and it's really just like a natural like movement that they do for security.
Boy, imagine sending that transaction.
I know it's sketchy. I think people have made mistakes as well. But that's the other thing too about on-chain data is like there's nuance to it. You can't just take it at face value.
Yeah.
Because if someone moves at 10,000 Bitcoin and you don't know the wallet addresses, which is impossible to know of everyone, you don't have the full context of the transaction. But on aggregate, it gives you some insights.
What about crime and illicit activity? Do law enforcement agencies ever come to you and say, hey, there's a big hacking operation out of Eastern Europe or Southeast Asia, and we'd like to stop them? So can you tell us where their tokens are?
Actually, so the company before we kind of pivoted to on-chain did just that in Korea. So they worked with the Korean authorities. This was prior to I even joined. But yeah, they worked with authorities to track down Bitcoin that was used in, I think, some trafficking case or like some content, illegal content online. And we helped track it down, some of the employees. Yeah. So like it's a very, even like it's like even more of a subset of like on-chain, like tracking illicit activity, wallets. So most of the time what happens is you get these wallets and activity to understand like who owned it, how the hack happened, and then you let exchanges know and they freeze your funds.
Yeah.
And if you swap it to a stable coin, then the stablecoin issuers can freeze those stablecoins as well. So that's normally the outcome of it. And then some people have made mistakes, like criminals of, sending it. They thought they obfuscated the addresses, and then they sent it to an exchange with their name attached to it.
Oh,
and
right.
that's how they got caught.
Yeah, right.
So some of like the Bitcoin OGs, like I think like Mt. Gox hacks got caught in those ways. But yeah, like on-chain tracking, because I'm sure you've heard the argument that maybe people that aren't in crypto, that it's really just used for illicit activity, or even some politicians will say it's just like kind of a function of crime.
Mm-hmm.
But the argument to that is like, would you want your crime to be tracked forever?
Right.
And you're not even competing with today's tech, right? So like when it came out, probably the biggest company in this is Chainalysis. They're probably the most successful kind of wallet tracking company. And they'd done analysis on, more analysis than us, I'd say, on like time zones. So they would probably be a better resource for that.
Okay.
And yeah, they basically kind of invented this kind of market of tracking like wallets and stuff. But yeah, like you're not even competing with today's tech, you're competing with tech down the road. So if I send you an illegal transaction today and we thought we were slick with it, and 10 years from now, the tech's going to be even better. The models to track it are going to be even better. So if you're safe today, you're 10 years from now, there's going to be even more advanced tech to catch you. So like the point is, I don't think crypto is even the best way to conduct illicit activity as a criminal. Yeah. So that's the argument against, I guess, people that think it's mainly crime related.
There's just an exploit right now that criminals can use because maybe the law enforcement tech hasn't caught up with the
maybe. I think
with the tech.
Yeah, that could be part of it. But yeah, the on-chain sleuths, we call it, they're so good. It's really amazing, like the analysis they do to catch.
Are they being hired
people
by agencies?
I think they probably are. I think most likely like I'm sure like FBI and CIA have some units now tracking cybercrime, and that's part of it. But yeah, like we work with some as well, like on the investment side, like people finding address wallets for miners or Bitcoin exchanges, things like that. Because that was another thing on-chain, I think in the last couple of years has been useful for, is actually investing in equities. So you're finding companies now like Galaxy or like Coinbase or any of the publicly traded miners they have products on chain that operate 24/7, and you can use that data to actually invest in crypto, like equities. So the most obvious case is like Coinbase for one. You can like holdings and general exchange health. But one of the data sets we sell is for miners. So most miners, I'd say, they kind of release their production numbers every month. But using the kind of data from the blockchain, you can track which wallets are by the miners. And then if miners send those to exchanges.
Mm-hmm.
So then you're getting basically intraday, what is the production of each miner? And where are they sending the Bitcoin or are they holding the Bitcoin?
And that's useful for investors in the miners.
For sure, because if you know how much Bitcoin and a mining company is holding, you know, like generally that's reflected in the market cap of their coin, right? So if they hold $1 billion in Bitcoin on their balance sheet and they're trading under $1 billion, well then that's maybe they're undervalued.
Yeah, right.
So, or if their production numbers are cut in half for that month, what happened? Did they lose some deal? Did they switch some of their hash rate? So there's there's insights you can get intra-month that normally you would have to wait for an earnings call to hear. So on-chain, I think, is starting to do that. And like on-chain is also a revenue source for other companies like Coinbase, Launchbase.
Are you preparing to explore offering data on tokenized stocks when they start?
I guess for tokenized stocks, I mean, you'd have data on like the holdings and things like that for them. But I guess the fundamental use case is just it's tracking the price of a stock. So I guess like unless it was actually on chain the company, then I'm not sure if it would give much info.
Okay.
But I think that's like a useful utility on crypto.
Sure.
Like what if you could just swap $100 of your stablecoin to Tesla or to Amazon?
Yeah, right.
And you could hold it all in there, which I think is interesting.
Yeah. So again, back to that geographic issue. So you wouldn't know if, say, Iran or North Korea, if people from there are doing right, because maybe for national security or for sanctions and things like that. Like, can you tell what these controversial nations are up to?
I think there's always like a North Korean hack in the news for crypto.
True.
I haven't
Lazarus?
followed
Are they the Lazarus hackers?
Yeah. So I actually haven't followed it too much, but yeah, like the on-chain kind of community definitely does.
Okay.
And they track the stolen funds. But yeah, you totally can. I think maybe through like context and what they do with it, it's more obvious. But on like the criminal side, I haven't looked into it too much. But yeah, you hear about it all the time, right? Different hacks, exploits, money flowing, like even white hat hackers. But yeah, there's been crazy exploits as well, like billions just taken in a second, which is crazy.
It's wild.
Yeah.
You know, since working for this company, what are some interesting insights? Some kind of I didn't know that would happen or correlate with that, or I don't know. Do you have any kind of examples like that where your company produces data that might be interesting for pop culture? Because it's just kind of fun to read about what people are doing. Like, oh, there's a bunch of celebrity NFTs, and here's how they tend to do. Or here's I guess the bored apes are back. Or I don't know, anything like, just kind of on the surface.
Yeah, kind of. Yeah, like when crypto transcends like pop culture.
Yeah,
that's always an
bit.
interesting one because like in Bitcoin peaks, that's the only when it happens. Like everyone's talking about it.
Yeah.
So I think I give the example of the FTX. It's less, I guess, kind of pop culture, but more like public news.
Yeah.
So an example was like we track their FTT token. And when you look at the makeup of an exchange reserves, you want to see like whatever, Bitcoin, Ethereum, stable coins, you want to see make up the bulk of a crypto reserve.
Okay.
But what happened with FTX is it was shifting like from these like real projects to their FTT token.
To their own token, yeah.
So their makeup of like their exchange, I forget the number, maybe like whatever, it became 70% FTT.
I see.
Instead of Bitcoin.
Yeah.
So like on paper during the time, you knew that the token makeup was way different of the exchange, which maybe would signal something. And then after the fact, we knew that they were selling Bitcoin, customer Bitcoin, to cover losses of other things, right? So now you can infer that the makeup is way different. And I think that totally changed now that most exchanges post their addresses anyways.
Yeah. Okay.
But yeah, as far as like popular culture, I think it's interesting now because influencers are starting to release their tokens, and even like I think some have been indicted now. They release a
Yeah.
token, they don't understand the legality of it because you're essentially launching a security at most places, and then you're selling the token on your users the day that you pump it and influence it and tell them to buy. So now you're getting like, yeah, like influencers who release a token, make a couple 100,000, and then get sued.
That's what that's why I thought it was so wild that there was a Trump coin,
Yeah,
which I think he says I didn't put that out. That wasn't me. It
yeah,
was another entity. So my hands are clean. But like in this age where you're right, all these influencers got in trouble for putting out their own token and pumping and dumping. Then there's a Trump coin,
Yeah.
and it's like, well, he's the president, so he's not going to get arrested.
yeah,
But still, wait. I mean, that couldn't have flown in the face of that trend any harder.
yeah. It was like a complete 180 from like the Biden administration
Yeah.
who were throwing down
Yeah,
just basically blocking
Yeah.
ETF approvals
yeah,
for a long time.
yeah.
But I guess, yeah, I haven't looked at the actual like structure of how he launched World Liberty. But I know that he's got backers from some of the biggest people in crypto, like founder of Tron. He just pardoned CZ this week, which is kind of an interesting, just an interesting event in general, which means that he's connected to the biggest players in crypto and he sees it at some level. But I think Trump, for example, like his scenario, whatever, being deplatformed and stuff like that, made him maybe go to crypto at some level to kind of have some agency in his own life outside of people attacking him, if you like him or not. Like people, whatever, attacked him, tried to get him off media. So he launched Truth Social. He launched, maybe he's kind of clinging to crypto now as like another avenue to become untouchable at some level. But yeah, regardless in the crypto space, like it's definitely interesting because he changed the game basically of what people feel comfortable doing in crypto.
You're from Northern Illinois,
Yeah, right in between kind of Milwaukee and Chicago.
and why did you move here? Does your company have a office here?
No, only office is in Korea, and yeah, the only person in the U.S. right now actually. Just moved to Minnesota for friends, just totally remote,
Oh, okay.
and just hanging out in Minnesota. I know it's so random.
Huh?
Most people on calls are in New York or Miami or
Yeah,
Korea, and then I'm out here in Minnesota.
but it's like location agnostic. You could do your job from Alaska.
Oh, for sure, yeah.
Yeah.
And most of the clients are around the world, so you kind of just check on markets anyways. And the good thing about being interested in crypto is you're already kind of doing your job outside of your job. You follow the market, you check things, you're up to date just because you're interested, and then luckily tie it all together.
What
for
is
a
your
job.
job exactly?
I guess the title is like a data consultant. So
Okay.
helping our clients use the data and their strategies,
So you'll
explaining
sell it and then walk them through it.
Basically, yeah, sell it, walk it through it, and then work with kind of sales to help the clients throughout their contract if they have questions about the data or metrics or any data errors, kind of troubleshooting them. So yeah, kind of like full service. We kind of launched our institutional sales
Hmm.
when I joined. It's me and then our head of sales. So we kind of just put it all together, trying to grow the institutional data business.
Did you start cold calling these institutions?
That's more of like our head of sales. He does,
Okay.
and I support. But yeah, I
Okay.
think there's a lot of inbound requests, and then yeah, a little bit of LinkedIn DMing here and there, a little bit of cold emailing, getting your name out there. But yeah, it's been cool to see, like, because over the past 4 years in crypto, I mean, everything happens. So many different events happened.
Yeah.
So you get
And it's growing. Like it's a rising tide. So there's just more and more use cases for your kind of data, I would guess. And there's more data to aggregate, more noise to sift through.
there is, I think, as well, because I mean, blockchain data is free, and
Yeah.
so as a provider, you have to decide: do you want to have coverage on every chain possible,
Yeah.
or do you want to have really deep coverage on a certain number of exchanges?
Yeah.
So I think right now what you're seeing in the data space is there's people really specializing in certain like categories of it. So like I mentioned Chainalysis, they're really great on like kind of wallets, KYC, investigating like maybe locations or time
Okay.
zones.
Okay.
So they've kind of subsetted that. Glassnode, really advanced for Bitcoin. And then us, we kind of have a combination of, custom data sets for like Bitcoin and tracking the flow of assets. Like that's kind of maybe our niche right now, is tracking the flow of crypto to exchanges. And then you have other ones that track maybe more DeFi projects, like really digging into like Aave or different swapping projects, understanding those. And then you have some that are getting into more of like social. So creating an actual application where you can kind of have a community of analysts, create content, or kind of like analytics marketing. So I think it's starting to kind of categorize into different groups just because there's so much data and you really can't have it all.
So in theory, Fidelity could reach out to you guys and say, hey, we want to buy some of your reports on activity, so we know which ones to offer our clients the custody, or whether we should buy or sell on their behalf or something like that.
Yeah. So they would use on-chain data. I think a big company like Fidelity, I mean, maybe they would build it out themselves. Okay. Or they definitely use like data providers, especially for like backup data providers. So any company that has a strategy running might use us and might use a combination of other companies in case someone's data feed goes out. Yeah. So there's like, I think a little bit of that as well, like some good redundancy and like offerings for the market. But yeah, like Fidelity would use us for finding some on-chain metrics or creating research for their clients if they haven't, built it out yet. But yeah, it's cool to have meetings with all these different kind of crypto Web3 projects and then also traditional clients as well, kind of as Bitcoin grows. But yeah, it's been honestly the best place to learn because you get a wide breadth of clients, and then also you get exposure to all the data.
Yeah, I could see people coming at your data from different places, different angles. Like maybe an investor, but how about like a startup a Web3 startup that's thinking of putting out a token? Might they come to you and say, hey, we want to do this the right way? What is your data indicated about previous projects? And what does it indicate about how we should do our tokenomics? Mm-hmm. Things like that?
Yeah, I guess we haven't done a project exactly like that, but at some level we do analysis on that. But yeah, a token project could totally have, and there's probably many companies in crypto that do this, but like advisors on token launches, or VCs will probably have an arm like specifically built out for the launch of a token.
Yeah.
Where we normally fit in is probably tracking. So like good projects and good companies will have transparency in their holdings and their activity. Uh-huh. So maybe we create a public like analytics page for a company that shows the activity and their use cases. So helping more on the transparency and like marketing is where I'd say where we'd fit in more, as opposed to actually designing like tokenomics for them, recommendations.
Okay. Do you offer like real-time data for traders? Mm-hmm. Like not only will we give you this report, with a bunch of research we've aggregated from the past 6 months, but here's a website you can go to, and you'll pull up this real-time data that's being aggregated and produced right here for you.
Yeah. So our data is basically available in a couple ways. So reporting is one, just a straight up static report you can read, and we send it weekly. And then we have basically a query table. To simplify, it's just all the raw data of a blockchain that a user can pull themselves. So you can write a code to say, I want the transactions from Bitcoin for this hour of this day, and I want to know only if they sent it here. So you can create a subset of data you want and pull it and download it into a CSV file or your own Excel sheet. And then most popular is our API. So you can programmatically call all the data in just in your Python code or any code in any kind of environment, which is most popular for our clients. And then our most popular feature is probably like our block level data. So for Bitcoin, we send data by the block, which is, I think for Bitcoin, whatever, it's like maybe 10 minutes a block and then a little bit of lag. So you get data every block instead of waiting an hour for it or every day. So you're getting the lowest latency for a data set. Because if you want to know if someone's sending Bitcoin to an exchange right now, you don't want to wait a day because then it's already too late.
Yeah.
So having it on the shortest time frame possible for Bitcoin is important. So that's another kind of feature too that people use us for.
Boy, I bet you've learned a ton.
Yeah, and I joined too as like a general role. It wasn't even like it was just like sales support. Like it was a new role entirely, and then it kind of morphed into sales and research, and then if you need to speak confidently about something, you need to research this other crypto too.
Are you doing some of the data analysis yourself?
Yeah. I create my own kind of analytics pages and different dashboards. Create some content for the media as well.
Okay.
I go on some Twitter Spaces sometimes. So yeah, it's also important to
CryptoQuant's own X account has their own Twitter Spaces.
Yeah, we do Twitter Spaces. Then we do like kind of joint research Twitter Spaces with foundations,
and then
like Tron, for example.
And then retail investors will just join your space and start asking you questions about the market and whatnot.
Guess in general we've done Q&As like that. Generally we've kind of partnered with certain projects. Like we work with.
Oh, okay.
Like Tron, for example, we'll do a research report for.
I see.
And then at the end of the year, we'll kind of present the growth of them, and then people will come on and ask us, like, even their marketing team will ask us, like, what are you seeing in Tron? Because there's one thing about having like internal data teams. Say it, and then also having like a third-party platform.
Right on.
Confirm it, adds another level.
And in general, I'm guessing you're just seeing the whole industry rise year by year.
I think so.
In terms of activity, bear market, bull market aside, it's just a continuous slow growth or even fast growth of more wallets, more transactions, more dollars being put into the whole system, all of that.
I think so, yeah. I think what's exciting about, I guess, this era is I think there's actual use cases now, or we're getting close to the use cases of where day-to-day crypto might be useful. Whereas in the past, I think you buy it, you hope the token goes up, maybe you trade it.
Yeah.
But there's not day-to-day utility.
Right.
But I think now, like, you're getting companies that are doing like whatever, stablecoin payments on a credit card, or you're taking loans from your crypto to buy a house in real life. So you're having companies use crypto rails for their actual products. Whereas before it was kind of an opportunistic playground of, can I buy Bitcoin low and sell it high?
Right.
Or can I get lucky on this project and sell it? So now, I think we're getting into the fundamental use case of crypto, which I think is about time.
I think you answered this earlier about tracking point of sale systems, and you're not able to do that. But are you able to tell if people are using Bitcoin as currency?
I think maybe at some level, like small amounts of Bitcoin do. Like you can look at the average maybe sending size of Bitcoin and values.
Like, are they on Lightning? Maybe it would be a better way to put it.
I think if you were...
So using Lightning to buy a coffee or something like that.
I think if you were using Lightning to buy a coffee, that would probably be a better look at like Bitcoin peer-to-peer.
Yeah.
But I guess my take is Bitcoin might not be the peer-to-peer solution. Unless...
Not right now.
Because you're asking people to take a lot of like jumps to like agree with you.
Right.
Because right now, there's no, like, I guess, objective, really logical reason to use Bitcoin if I wanted to send you money to buy coffee or buy a coffee.
Principled reasons.
Most people have a principle.
It would be a principled
philosophical
reason, which most people don't have.
Yeah.
Because they're not that into the movement.
So you're asking, like...
They're looking for convenience to get their coffee.
It's like what matters to people.
Yeah.
So that's the argument is like decentralization. When is something decentralized? Well, there's no definition, right? So like, do I use a project that has this many nodes or this many nodes? Or is your dad going to use a network because it's 1 cent to use?
That might determine in the end which one lives.
Yeah, maybe.
But yeah, most people I just want my coffee.
Exactly.
You know, do you take these dollars or do you take the stable coin or what do you take?
Yeah. I think, So I think that's important too. Like the cheapest and fastest network might win on the peer-to-peer side.
You could probably know then stablecoin payments. You know, if you look at a $4.36 or 4.36 USDC spent, you know, it's probably a safe bet that's
exactly, yeah.
That looks like a price of a small item.
Yeah, so like sub $10.
Yeah,
like you could look at those and do an analysis, and we've had so many charts like that.
I'd like to know because they're saying like, oh, more and more we're taking crypto or here or there, and you know that's been an attempt of Bitcoin for a long time. to now it's about first it was just accept Bitcoin at your business, and that didn't take hold. But now it's institute Lightning, and then we'll pay you in Lightning, on the Lightning network, and that has happened, but I don't know if it's catching on at all. I'm curious.
Yeah, I don't know if it's catching on too much. Like in the U.S., I guess. I don't know, our banking system's pretty advanced, so it's using a credit card and your Apple Pay is quite easy.
Yeah.
So I think what you're finding is people like us that might just view it as kind of for the hell of it.
Yeah, it's a novelty. Yeah, it's a novelty.
It's a novelty, and it's actually more often than not, it's less convenient to set it up and do
100%.
it. So, like from the US, I think it's hard because maybe it'll be interesting to see when we notice it actually being like used.
That's true.
Because then it means
about the dollar.
Then it means it actually might be useful.
Yeah.
Because it's so advanced here that, I don't know, I do it for fun.
Right.
See if I can pay with it. Or some people buy gift cards with it.
Right.
But like for example, I have like a Solana credit card. You just send money, you can spend it just like dollars, and it's so easy.
Yeah.
So that's nice. Like, let's say you have all of your money in crypto. You really live the crypto life.
But do you hesitate to use it? Because I don't want to spend my Solana. I mean, we're still in a bull run.
Well, I think, I can just load on USDC. I normally just hold stable coins.
Okay, got it.
So, like if you really live the crypto life, like 90% of your worth is in crypto, then it's nice to have a card that kind of connects it.
Yeah.
But how far away is it from like people's dads and moms and grandpas using it to send?
Forever.
It seems quite far right now.
Yeah.
Yeah.
Yeah, but I can see in countries with less stable banking systems, the use of stable coin I know is popular.
Yeah.
Like for remittances and things like that.
Yeah, like so the payment company we use for our payrolls recently just added USDC for Solana like 2 weeks ago. So they're starting to do it. I think it's more of like a tech, like a startup kind of
And you're
company.
a crypto company.
So I think it makes more sense. But still, I think it's a step in a direction where maybe it makes sense.
Yeah.
But personally, I think, I don't know, like receiving your salary in crypto doesn't always make the most sense unless you really want it. I'm trying to send it, but yeah.
Yeah, it's not mainstream.
No, it's not mainstream.
Not in the US.
Yeah, I think we need just to find a use case where it makes sense to be mainstream. And payments is the obvious one, right? Stable coins. Like, even my dad's like, why would I ever use Bitcoin or a stable coin? I'll just use a credit card. Well, it's like, well, what if I wanted to send you 10 grand?
True.
Then that's like the easy example.
Yeah.
Do you want to wait 5 days for it to get to you? Or do 7 different Zells?
Right. Yeah. Large transactions.
Yeah.
And in countries with less stable banking systems.
Yeah, I think that's it. And then
you can have access to the dollar. Like in some of these countries, they want dollars. Mm-hmm. Like Venezuela, I hear they want dollars, but it's hard to get dollars. Well, you can get stable coins.
Yeah.
Now you can get dollars.
Yeah. Yeah, I think it's nice, and I think like the US, for example, it's good. Like your dollar is just becoming more integrated in other parts of the world.
In a interesting way, the adoption of stable coins has been it's like halfway. It's like meeting the US dollar halfway.
Mm-hmm.
It's like the crypto people 10 years ago, we want crypto. And the dollar people were like, no. It's like, okay, how about stable coins?
Yeah.
So it's dollars on chain, but it's also not a central bank digital dollar thing.
Yeah.
It's it's a private.
Yeah, you're kind of riding the line of it being it's still a dollar and you have more freedom with it, but it's more tracked, I guess, as well.
Yeah.
And there's still some controls on pausing wallets and stuff. And there hasn't been a good solution yet to like a fully decentralized stablecoin. If people remember Luna, that was probably the biggest attempt at it.
I do.
But yeah, I think stablecoins probably going to be, you could do a whole presentation on stablecoins, whole talk on it.
I'm sure many people have.
Yeah.
I don't know if we'll get someone on this podcast about that. I don't know if I can ask enough questions on stablecoins. I don't know how many listeners we would have. That's a pretty...
Little stablecoin action.
That is such a niche topic.
It's a niche.
Yeah.
It's niche, but it's the most popular use case of crypto right now.
That's true.
Which is kind of crazy. Other than number go up. That's like the biggest... if Bitcoin stopped doing number go up, then...
There's still collectors, too, of NFTs.
Yeah.
People like collecting NFTs. Like they like collecting anything.
Yeah. Digital ownership.
Mm-hmm.
Now we're getting more into like
I was going to ask about
philosophy.
that. Well, what about like non-money, non-financial data? Like, oh, there are these records kept on chain.
Yeah.
Oh, there are these, or NFTs themselves. They're non-fungible tokens, so you're not going to use them as money.
Mm-hmm.
You can trade them,
Yeah.
right? So you can still make money with them, but people might just own them and collect them because they like the art or whatever. Do you anything there that your company looks at non-financial?
I guess we haven't tracked really the kind of like NFT data.
Because they're saying more will become NFTs, like your housing deed, you know, medical records, I don't know, things like this.
I actually don't know if I have a strong feeling that even needs to be on chain. I think it at some level, like putting it on chain has become a little bit of a meme. Like, oh, let's just throw it on chain for the hell of it, just because you can. I think some data makes sense, but realistically, if it's attached to like a housing deed, for example, what advantage do you get it being on chain? Like being on chain is really transfer of ownership. Like that's the utility of a blockchain at some level. Like this person owns it, now this person owns it. So like what we found is even products in the real world that are on chain, you kind of have to go through the steps to make it kind of defeat the purpose of it being on chain. An example is like some projects released, you could buy treasury bills on a blockchain, but it's like you can't just spin up a wallet and buy it. You have to go through the company. You have to KYC. You have to send them your ID. They have to whitelist your addresses to hold it. So what advantage is the average person getting it being on chain?
They can't confiscate it?
They can't confiscate it, but I mean, what are the odds someone's going to confiscate your T-bills from you?
I think it's also tracking. Like if the state, like let's say, I'm just going to think of a random state, Oregon. They're like, oh, we're going to put our housing deeds, or they're not going to put but then someone goes to they want to access their housing deed and they can't because it's a Sunday or it's a holiday or they're not getting back to the person, right? And you're stuck at this, right? This central point of failure. Or what if something happens? Like what if the server they keep all this info on?
Yeah.
Or the data ransoms. Like, oh, we hacked into your system. You can't access this data to run this electric grid or to run this, I don't know. And I'm just thinking outside the box here. But if some group went in like Lazarus and said, okay, Oregon, what's the capital? Eugene or Salem? I always forget. One of those two. Hey, we just got into your system, and you cannot, you can no longer access criminal records or something like that.
Yeah.
So maybe just for a security standpoint.
Yeah, maybe security, but I mean, then you have. I mean, it'll be.
It raises security
in
issues
some way. It raises new ones. Plus, I think maybe if legal frameworks. I mean, we're in a law office right now, but think about if you're a company or if you're a governing body and you're choosing which network to do it on.
Oh, that is So
you're choosing this network that the government previously claimed was a security, and it's going to be regulated in a different way.
Yeah.
You don't know the nodes of the network are.
Yeah, this is largely theory stuff.
Yeah,
it's down the road.
It's
California attempted to put, and maybe I don't know if they stopped that program, but they were putting DMV info on chain, driver's licenses.
Yeah, I mean, but then you got to decide like what network?
Which network?
Which network? Are the validators of the network in the U.S.?
Yeah.
What if validators choose to stop allowing transactions on for this day or whatever?
I think this might be a continuing conversation within boardrooms, but I think companies experimenting with blockchains, one of the big decisions they were making was, should we create our own private blockchain or use a public? And the crypto people are like, or maybe they hired a consultant and like, well, you got to use a public chain because a private blockchain isn't even really a blockchain. It's just a database. So what's the point? But then they're like, well, we don't want to use Ethereum or, a public chain because then we're trusting them.
Yeah.
And we don't. So I think there's some of that.
I think there's some projects that have tried to find the balance of this. Like I think JP Morgan had worked on their own blockchain. And I forget what it was. Avalanche is a project that you can create your own custom blockchain.
Okay.
Like, and share like validators across them. And yeah, so it's like for compliance reasons, some like traditional companies might spin up their own blockchain for tracking, or maybe it's faster and cheaper to send money. But I think I'm a Solana bull. That's my favorite project. And one of their use cases was, or like early phrases was like blockchain at like NASDAQ speeds. So like, can a blockchain ever compete with the NASDAQ for trading? Like, what if you had a system that was so fair and even more fair than the NASDAQ is now for like routing trades across the world? Like, could you compete with traditional systems on a blockchain? So I think that's a use case as well. Like, the trading of value is like human nature, and the NASDAQ and the stock exchange trade so much value, right? So like, maybe crypto is a better way to do that across the world in a more fair way. So I think that's something more interesting on the investment side too, tracking. So yeah, that's kind of a thesis on my Solana bull.
So you're presenting tomorrow night at our meetup. What will you? How will that presentation differ from this conversation with the aid of visuals?
Yeah, so I think I was gonna basically give a good background, a little bit on the company, but mainly on the types of data sets that are available in crypto. Like, really, my goal is to show new types of data in general, because I think there's a lot of data sets that people don't even know exist. Even before I joined this company, I didn't know exist, even though I was involved in crypto. So I think having visuals, really showing, price versus this metric, will kind of hopefully let things click for the audience. And then also kind of give pillars of use cases. So if people are interested in equities, how can it be used for equities, or risk management, or valuation, or choosing like fundamentals between different projects.
Yeah.
And then towards the end also, I think I'm doing like a what would Ben do slide that gives like a current market update based off of today.
Okay.
Like, where do I think we are?
Well, people are going to eat that up.
So
they're going to love that part. Yeah.
It's a bit of a gamble to be putting that putting that out there, but I'm ready. I spoke with people from my company too to get kind of their takes on the market.
Cool.
So yeah, hopefully just give some clarity on data sets, and then hopefully kind of it's a great timing, because this is basically when we peaked the last bull market, like this exact time of the year. So now, like, within, even if it extends 3-6 months, the cycle ends. Like, now I think hopefully they'll have some tools to look at, engage, other than Bitcoin's going up forever, because that's going to happen. People are going to say that, and then it always turns out to not be true.
Right.
And if I'm wrong and Bitcoin goes up forever, then we're still winning.
Right. Yeah.
Yeah. But I think it should be cool, and hopefully there's some good Q&A as well.
Yeah, I'm pretty sure there will be.
Yeah.
Yeah, I made sure to put that in the promotion, like lots of questions answered and triggered.
Yeah.
From this presentation, I anticipate that for sure.
Yeah, I guess also too, like my kind of one of my main points is like it's not just on chain for investing. Like, I think there's a whole group of data to look at. But I think this is maybe the most overlooked right now in crypto. So I think like using actual price data with on chain, with social sentiment, and kind of having these pillars of your investment is important. So yeah, my goal is to really just give a breakdown of it, and then hopefully dive into the details for any Q&A.
Do you offer data on just the whole crypto market in general? Like, if you take all the chains and like put them on top of each other, this is what we're kind of generally seeing.
I think you can kind of get an estimation, but
a chart of charts.
A chart of charts, not a total chart of charts. The best thing to do with that is like maybe like a Bitcoin dominance chart. If you go on TradingView, it's like the most used like kind of TA tool. Just search BTC.D, and it shows you the percentage of like the market that's Bitcoin versus everything else.
Yeah.
So as far as like a total indicator, that's probably like the best to show like the strength of Bitcoin versus other kind of cryptos. And then like as far as a full activity index, Bitcoin's still a good proxy because it is like normally over 50% of activity in the market, or is market cap basically. And then I think we have like 10 or so blockchains, so you can make like a stack chart of transactions over time. But yeah, I mean, I don't even know how many layer 1s and layer 2s there are. It's nuts.
Yeah, that's true. It'd be impossible to get all the data.
Yeah, so that's the other thing. Like, some companies are there's enough room for multiple companies because there's so
Clearly.
many subsets of data.
Yeah.
Yeah.
There'll probably be more.
There will be.
Yeah.
Probably since we had this podcast, there's a couple more.
Well, thanks so much.
Thanks for having me. Yeah, this was cool.
This was cool.
Yeah.
There's a lot of good info in there. And thanks for also prepping for tomorrow night. We look forward to that.
Yeah, hopefully, if people are interested too, I could get some free resources together and kind of share.
Oh, yeah, you mentioned that in our
there's some public
messaging.
Like anyone can make a free account on our site and check out different dashboards. So
That's awesome.
yeah, I'll hook up anyone up that needs some access.
Cool. All right, thanks a lot.
Yeah, thanks again.